Welcome to Books in Sum, your go-to for bite-sized book summaries.
2 in 20 by Sachin Khajuria. In his book 2 in 20, Sachin Khajuria gives readers an inside look at the lucrative world of private equity investing. It's like those TV shows where a couple buys a dilapidated house in a trendy new neighborhood and then sells it for a fortune. Similar to buying stocks or putting money in a savings account with a high interest rate, private equity is a form of financial investment. Private equity allows investors to multiply their initial investment, which is great news. However, most people don't know what goes on behind the scenes or what it takes to succeed in this specialized, secretive financial field. This blink to Sachin Khajuria's 2 in 20 is an insider's look at the multimillion-dollar asset-flipping world of private equity. It's like those television shows where an attractive couple buys a dilapidated house in a trendy neighborhood and then renovates it to sell for a profit. The goal of private equity investing is to profit from the sale of troubled businesses as a whole. Purchasing a struggling business and nursing it back to health over a number of years requires a substantial financial investment, making this strategy high risk for investors. Furthermore, investors in private equity investment schemes typically have no access to their funds for a predetermined time period, and there is always the chance that the acquired company will not be profitable and fetch a high purchase price. While private equity can provide substantial returns for investors when it succeeds, it can also suffer catastrophic losses when it does not. Due to the high stakes and potential for large returns, private equity is currently the hottest industry to work in. Private equity is expected to double again in the next decade, reaching $20 trillion in size from $12 trillion in the past. Blackstone is one of 12 top firms in the industry. It manages about $875 billion in assets. Private equity firms typically pay their partners a 2 in 20, or 2% of capital invested annually plus 20% of profit. This means that the success of the company has a direct impact on the financial well-being of every employee. Private equity senior partners can expect to amass a $100 million fortune by the time they reach their 40s. When compared to Wall Street, private equity firms are like night and day. Heavy security and an atmosphere of intense concentration are commonplace in private equity firms. The kitchen will have plenty of healthy food options and a high-quality coffee machine, and the furniture will radiate quality and practicality. The founder will have the most space in which to work, but they will be kept quite busy with meetings with the other partners. There could be as many as 20 partners at the firm, and everyone will work together openly and freely. Deal teams for each partner work in close proximity to one another. The deal team consists of 4 experts with varying backgrounds who are tasked with developing billion-dollar business strategies. The 4-person team, comprised of experts with varying levels of experience, is in charge of developing strategies for billion-dollar deals and business plans. The group of 4 experts, who bring varied backgrounds to the table, is in charge of developing billion-dollar business strategies. The group of 4 experts, who bring varied backgrounds to the table, is in charge of developing billion-dollar business strategies. The 4-person team, comprised of experts with varying levels of experience, is in charge of developing strategies for billion-dollar deals and business plans. The group of 4 experts, who bring varied backgrounds to the table, is in charge of developing billion-dollar business strategies. The 4-person team, comprised of experts with varying levels of experience, is in charge of developing strategies for billion-dollar deals and business plans. There are 4 experts on the team, all of whom bring the most critical information in this document is the procedure for transforming an antiquated supermarket chain called FarmFresh into a premium, customer service-oriented label. All of the company's assets, liabilities, opportunities, management, supply chains, and marketing efforts must be reported. The deal team will use the information in these reports to formulate a plan to turn Foodmart around from insolvency to market leadership. Each member of the team will take turns playing devil's advocate and pointing out the flaws in the other's business plans. The founder approves of the plan, and the manager works out the details. Over the next 18 months, a lot of hard work will transform FarmFresh from a rundown grocery chain into an upscale service-oriented brand. The text focuses on the company's accomplishments in the fresh, organic produce niche market. Stocks are up 30%, and the company's initial investment is up to $3 million after 2 years. Because of the 2 in 20 payment structure, a team of only 4 people was able to accomplish this. Motivated individuals who can take calculated, creative risks and enjoy the satisfaction of finding opportunity where others see failure or crisis are attracted to the private equity industry. Billions of retirees rely on their pensions, making client investment protection more important than making a profit. After making a fortune in the industry, many professionals stay in it because they enjoy the challenge of turning a negative situation into a positive one in which everyone involved succeeds.
We hope you found this summary helpful in your listening journey. If you're interested in diving deeper into the topic or getting your hands on the whole book, be sure to check the description below where we've included links to the book and other related products that may be useful to you. Don't forget to hit that subscribe button to stay updated on our latest book summaries, and feel free to leave a comment with any suggestions or requests for books you'd like us to cover. Thanks again for tuning in and happy listening.